Be with you guys in 2 secs. Morning, guys. Morning. How we doing? What's up, YouTube? Morning, YouTube. Just getting set up. Bear with me 1 sec. Morning, Jamal. How's it going, bro? I'm on YouTube, guys. If you guys want to jump on there from the old server. Smurf, what's your... Do I only know you from YouTube? Why do I feel like I recognize your name? Do I know you from Twitter or something? Where do I know you from? Recognize your name, dude. YouTube. Ah, cool. Good stuff. I hope you got access to the daily plans, Smurfo. I hope you got access to the daily plans. Oh, cool. Good stuff, Smurf. Appreciate it, brother. If you're not aware, Smurf, then there's now free daily plans inside Red Pill, so you don't even need to be a member. They're completely free. I write them up every morning, and I'll just show you them here. So these are the daily plans. They're free for everybody. But yesterday we absolutely slappoed right on the low, H1 to M5 on the low. So again, today's right up today is inside of here. So it saves me regurgitating a lot of stuff. But if you want to grab them, they're entirely free. It's up to you. So today, oosh. So inside of people who obviously know how to trade and know how to trade for a while will know that I have a number of models that I can deploy into the marketplace at any given time, right? So historically speaking, not even historically speaking, the way that I trade is that I'm primarily discretionary in my approach, and I utilize X levels to dial in my PD arrays. Okay, and then there's certain tips and tricks that I have in terms of how I trade turtle suits, right? And I have a whole process in the way that I trade, and I go through context, schematics, time, market structure, and entry techniques. So how it works with entry techniques is that I align them with the principles that I'm always looking for with price, which is based around context and X level dealing ranges. So essentially the entry techniques overlay and provide support to any trade idea. So this morning, my model which deployed, and I'm happy to share this model because it's one of the models. It's one of my new models. And so yeah, I'm going to share this to the World Wide Web. So there's a whole host of stuff which I teach inside Red Pill, which is specific to Red Pill, but this is a model of mine. So if you guys want to learn this model, this is going to be completely free on the house for everybody who's tuned in today, because I feel like giving today. I'm in that mood. Well, I'm just here to help. Okay, so this is a unbelievable model that you could literally just deploy this model alone and wait for this model to set up, and you'll be set. Okay, the trick to this model I'm about to show you is, can you be patient enough to wait for it to set up? Okay, so I'm going to talk you through it today. So obviously these are X level dealing ranges. So this is our high, this is our low. So discount side, premium side, that you'll know in terms of how I draw dealing ranges. Good morning, Elon. Good morning, good morning, good morning. Right? Source o'clock is coming in hot right now, okay? So one of the main principles of price you always want to be mindful is, if you're going short, you want to be short inside of a higher time frame premium. If you're going long, you want to be long inside of a higher time frame discount, okay? And my X levels enable you to dial that in, okay? So first port of call is you want to be inside of a higher time frame premium, which this morning during London, we were inside of a higher time frame premium. Okay, there's also other things which we can overlay on top in terms of schematics, purges on Asia highs, X, Y, and Z, but I'm just purely going to talk about the model in itself today. We also found ourselves at fair value on the daily dealing range. So traditionally, I don't trade around fair value when I'm anticipating consolidation, because that's generally where price goes into price distortion. However, we were inside of a higher time frame premium on the hourly. So albeit we were at fair value on the daily, this is providing the institutions an opportunity to repopulate short positions to drive the market lower, right? Given that we're inside of a higher time frame premium after sweeping liquidity, right, up on the high. Okay, the principles of price, you always want to see price manipulate above a high, manipulation before distribution, right? So this is just like very, very basic market structure, right? And obviously the rabbit hole goes deep, but I'm just keeping it highbrow for now. But the model itself is my mechanical TS model, is what I'm going to teach you today. Okay, it's a mechanical TS model. And so what we're looking for is a change in the state of delivery on the hourly time frame. Okay, so it's keyed off the hourly time frame. All right. So first step is being inside of a premium. Then we're going to look for a change in the state of delivery on the hourly time frame. And how we're going to then dial this in even further is we're going to look for a divergence on the hourly at that high. Okay, so for those who know how I trade, I have a whole host of ways that I trade. SMT divergences, I've developed my own 3 different approaches to SMT. This is one of them. So up in here, we have this divergence up on the high, okay, between ES and NQ. So now we have step 2 boxed off in the sense that we have our now divergence up on the high. The next step is we want to see the change in the state of delivery on the hourly candle. Okay, so like this candle here. So ES turtle sweep this high. So whether you were trading ES or NQ, doesn't matter. So this, once you see the SMT, this change in the state of delivery on this hourly candle, which is this hourly candle. So a change in state of delivery is when price goes below this candle low. All right. What you're then going to do is you're going to measure that candle and you're going to look for mean threshold and price not going through mean threshold, because essentially what you now have is a higher time frame order block. So inside of this area here is where you're going to look for your short. This is where you're going to look for your short. Okay. Inside of here, when price comes back, you're going to look for your short in here. So I'm not going to go into detail into how you frame that short. All I'm going to tell you right here is this is where you are framing your short. So if you are a turtle suit trader, this is where you're now looking to dial in your entry inside of this exact turtle suit zone, I call it. So what I often look for is a breaker block up on the high inside of that candle, which had the change in the state delivery. So this now, soup, is your entry. Bingo. Okay? What you're then going to do is you're going to measure out your extension on this high. On your 5-minute chart. And you're going to seek 2 standard deviations. That is your mechanical TS model. Okay? So you'd be entering here. Stop goes above this high of this turtle suit zone. I hate using the word zone, but I couldn't come up with a better name for it. And you're going to search for 2x. That would be your trade. That's what delivered. That is my mechanical turtle suit model. All right, so you can have that one on me, guys, for this morning. That one's on me. You're welcome. So where I'm at now is we now obviously have a change in the state of delivery up on this hourly time frame, up on this candle. So up inside of a premium on the hourly, inside of fair value on the daily. Personally, for me, I want to see continuation. Right? Xmas came earlier with the free model. Amen. Amen. And honestly, it is an absolute beastie model. Okay, now there's different ways you can look at it and you can build upon it, and that's entirely up to you whether you want to go down that rabbit hole. But that model you can utilize is source. So what we are, I'm now keyed off this high and I'm now searching for, okay, so where is price likely to be going and what PDRAs do we have that can support price for continuation to the downside, right? So if we just flip to the 15 is now going to pull in my MWOG chart. So obviously we came down to our MWOG mean threshold, right? And this is actually a 15-to-1 model on the low. I'm not going to go into that today. Right, on this low, back down inside X levels discount. So what has happened, price has moved from a premium to a discount on the higher time frame utilizing that model. And that is all price is ever doing. That is all price is ever doing. Right, it's moving from a premium to a discount or a discount to premium, searching for inefficiencies in liquidity and price. That is it. No if, buts, or maybes. That is it. Right, and we utilize X levels to define that. So premium, discount, you'd be looking to frame longs to take price higher in the context that we have no news, right? So price is more likely to consolidate. That being said, with this change in the state of delivery on that hourly, I'm now looking for continued bearish price action. So now I'm asking myself, okay, so where could price be leading to, and what PDRAs do we have for price we want it to be driving towards, right? Well, there's context on these lows. We have a wider divergence on this low. We also have this BISI, which is left open. We have a volume balance just below it. First port of call would be this wick on the daily on the 15th of Friday, right? Why? Because the last 3 days wicks hold value, right? So mean threshold of this wick is my current POI on the low. So we then can start overlaying other things and such as weekly profiles, yada yada. I'm not going to go into that today. So what I'd be looking for is PDRAs to now support bearish continuation. Okay, because we've now had our change in the state of delivery on the higher time frame, right? So if I was looking for continuation to punch through this MWOG, I'll be looking at this higher time frame mitigation block to now act as resistance for price to continue down. Currently, we're inside of a 15-minute discount here. This is a 15-minute dealing range, if you're wondering what this is. So at the moment, a potential is the lower quad of this M5 SIBI, which is going to get you back to fair value on the 15-minute, which is going to be just inside that mitigation block. If we punch through this lower quad, I'll be looking up towards the rejection block on the 15-minute, which is up here at 43. So those are my POIs on the high for a continued short to come and drive out the lows. If price goes through this mitigation block, I'll be moving to the sidelines as it's more likely going to come and drive out this divergence up on the high, right? It's more likely to come and drive this out. However, at the moment, I'm looking for it to come and drive out this low. Let me just switch to 5-minute quickly. Does that make sense? Does anyone have any questions about that? Mechanical TS model. Yes, sir. Makes sense. Good stuff. Yeah, no, just busy doing other stuff today. Rambo. I took a long. Now I'm currently waiting for MIT 62 to see if that presents itself on this low for continuation to get up into this M5 if we get up there. So currently MIT 62 is going to get you down to 32.75, which is right inside of here. So that's my current POI at the moment for a potential long, depending if we get base rule triggers on the low. But yeah, just been busy, dude. Super busy this morning. I didn't trade that. I basically woke up, looked at my charts. Went fair value daily, no interest. Didn't even look at the hourly. It was about here. I was just like, no. Had other stuff to do. Had a monster day yesterday as well, so didn't need to push it this morning. But then I came to the chart here and I was like, oh shit, there's the mechanical TS. I've just missed it. Great. Well, that's what happens. You snooze, you lose. There you go. There's your further context on this little pivot low. All right. If you were trading this higher at this point in time. All right. Not wanting to see price go below So 50% of this wick, if this candle's going to 50% of this wick, price shouldn't go below that low. If it does, you just move to the side downs. Yeah, nice entry if you got that, Steve. One tick off. Oosh, horrible. So our 5 minute is actually this range. So red pillars will know. Obviously, you had your base rules on the low. You know, once it's fulfilled that objective, this way you can start looking for your PD rates to support, right, inside of a discount. And then just want to consider your projected range, right? So for me, projected range, low hanging fruit is lower quad of the M5 Cibi. Right? So as long as you're entering inside of that, you know, beautiful. Inside of here, probabilities reduce, however, you can still do it. Anything above 50% of projected range, don't get involved. Sit still. You missed the move. Ah, boo boo. All right, so anything in here, there is no opportunity. There is no trade inside here. Right, this is above 50% of projected range. It's like a very simple rule to have in your trading that is going to cut out so many bad trades. So many bad trades. When you go into a trade, always ask yourself, make it a rule. Where do I sit in my projected range, and am I in the lower 25%? If you can answer that confidently, take the trade inside the lower quad. Right? So we can go back to yesterday's PA. And if you read the daily plans yesterday, we were trading a classic buy day template. Right? So my H1 to M5 model on the low, we also traded the classic buy day schematic back into another H1 to M5. Okay, so our projected range was actually to come and drive out this high. Right, this was our draw yesterday. All right, to come and take out the high. So again, same principle. Where's it gone? That's why. Right, so always ask yourself, where do you sit with your projected range? And there was easy context for why price was going to come and drive out this high yesterday, right? Buy day profile. Am I in the lower 25% of projected range? Elon, I'm pretty sure I have, bro. It should say TradeX live, no, 19th of November. It should say that. I hope it does anyway. Or it should do. So look, does it? I did change it. I changed it late though, so. Yeah, that's all right. It says TradeX live. We're good. We're cooking. We're cooking on gas. Oosh. Right, so if you're inside of the lower 25%, this is like a layer of confidence for your trade. Right? It's an added layer of like, okay, well, if I'm entering and I'm in the right side of the move, I'm entering where I should be entering. Right? Because a lot of times you'll come down here and you'll be like, should I be entering here? You know, is this the right place? Should I be deploying the right models in here, right? If we're actually looking at this, we have mitigation on the low. This formed part of the bias yesterday. right, amongst other things. And you are, is this the right mitigation? Is this the right, the model that I should be deploying on this low? Even though you're inside a higher time frame discount, daily discount, blah blah. You should only be entering a trade if you have a terminus where you're looking to take price, right? Otherwise, why in God's name are you taking the trade? If you're just getting into the trade out of hope and you're like, well, I'm just going to take an arbitrary 10 handle stop, then come on. So if you're planning a trade and analyzing a trade on where price is going to deliver to, you have a terminus point. Okay? So if you're going to enter in that trade, measure out, or at least have in the back of your mind, or eyeball it if you don't have the time to draw it, eyeball it. Am I in the 25%, lower 25% of projected range? Yes or no? If you are, it supports your trade. As soon as you get above 50% of the projected range, this is where your probabilities reduce. I personally do not enter inside of or above 50% of projected range unless I'm going outside of a higher time frame premium when I know that I'm inside of a buy program. In that example, as soon as you get above 25% of projected range, which would put you into here, price is more likely to go and fulfill its objective on the high and seek the external range liquidity than it is to go back and hunt for sell side in a bullish example. So if I am in a higher time frame premium and I have a clear dull external range liquidity after a sweep of internal range, and now we're driving out all the external ranges, right? Inside of a buy program schematic, bullish buy day profile. And we are inside of the upper 25% and I have my DR and I'm inside the X levels premium, that is the only time I would do it if it's in alignment with a macro and I have my base rule principles to apply. That is it. And I would be trading it with a super tight stop and I'll be literally just driving out the external range liquidity. That would be it, because price is only going to fulfill that objective. That is the only time. Okay, but 9 times out of 10, you're going to want to ask yourself, am I in the lower 25% of projected range? Let me drive that home, guys. It's so important. It's so important. Okay, so if we go up to this day, so this is another one of my models, right? So this is accumulation inside fair value, right? On this day, coming out of search and destroy profile. I actually had a different bias on this day, but so I actually didn't trade this day. But again, same principle. If you were in alignment with this bearish bias on this day, so massive high time frame premium above 21% on the daily, at this point in time, we were inside of a higher time frame premium on the hourly. Okay, this is accumulation inside fair value. All right, so this sweep. But the same principle, your objective is going to be coming to sweep higher time frame liquidity in accumulation inside fair value. That's what it's for. Right, so there's your target, there's your doll. So same principle. You're going to consider where is the upper 25% of that projected range. And that is where you're going to hunt your entries. Okay, so if you didn't trade, this is my search and destroy profile model, and you were here at the open, you're going, okay, well, how the fuck do I get in this? Or where am I going to at least start to dial in my low risk sells? Where am I going to go and hunt them? All right, well, you're going to go and hunt them or look for them inside the upper 25% of projected range. If you find yourself punching in shorts and you are below 50% of projected range, you are in the area where offset accumulation is more likely to take place. Right? Don't do it. right? You're going to wait for price to provide you an opportunity inside the upper 25%. And that is your low risk sell. Okay. So red pillars will know what this model is. All right. All right. But getting back up and using that same principle of being inside of the upper 25% if you're going short, or the lower 25% if you are bullish. Right? Makes sense? This is such, honestly, guys, this is such an incredibly important point. Like, and it will completely and utterly change the way that you are trading if you apply it. So for example, looking inside of here, going back to this piece of price action, just to drive it home, my projected range is to get back up into a premium, right? I want to get price back into this mitigation block at a minimum. I want to see it get back up into this M5 SIBI. Well, if you had that same bias, why in God's name, after everything we've just explained, would you be trying to hunt an entry in that long? Why would you do that? Genuine question. You wouldn't do that, would you? Okay, so you have to take, it's all well and good knowing this information, but you have to take it on and deploy it in your trading. If you do that, you're going to eradicate a huge proportion of your losing trades because you're trading where you shouldn't be trading. Right? Your last opportunity, and even this isn't a low risk buy. You know, this is still subject to being swept, all of this in here, is the 50%. The gap between 25% and 50% of projected range. Right? But even this isn't amazing entry. This is like, you know, average. Right? You'd want to definitely be taking 90% of your positions off and only holding runners if you're entering in here, right? You certainly wouldn't want to be entering in here long. Okay, so purely on that basis alone, I'm not looking for longs. I'll be going, okay, well, if I'm looking to get price back up into this lower quad, is there an opportunity for me to get in alignment back inside of a discount for me to go long? And do I have a model or a strategy to do that? Okay, so mitigation 62, you guys will know what mitigation 62 is inside of RP. You have no 62 inside of any of this. There is no 62. Okay, so 62 at the moment comes in at 32. Right? That's mid 62 right there. Okay, so not an amazing entry, not in the lower 25% of projected range, granted, but inside of a discount, inside of or below, at a bare minimum, below 50% of projected range. Right? So it enables you to help you dial in where you should be looking, and it helps you filter out when you shouldn't be trading. Okay, let's have a look at another example. So, Asia to London session Judas. You guys will know what you're trading here. If you're trading an Asia to London session Judas, R pillars, right? You'll know how to trade this and what you're looking for on the low underneath engineered, right? Your target, if you're trading an Asia to London session Judas, is obviously the London high, right? Or the high, sorry, during Asia. The high purge. This can often happen slightly after, but it's going for this high. All right, if you're trading in Asia, so there's your purge, there's your Judas, main move. Low hanging fruit, this high. So there's your projected range. This low, this high. Can you get an entry in the lower 25%? That is where you're hunting your entries. Bingo. Inside of here. Even this dip back into this little breaker block here. Boom. Back inside 25%. Low risk buy. Okay. If you're actually trading this like an elite trader, where you're trading this all the way back up to the higher time frame Earl, in what then turned into a buy day profile, right? Judas into a buy day. And you held runners through all of this. Same principle. If your projected range was even the low of this MWOG, can I get inside an entry in the lower 25% of projected range? Okay, so if you're anticipating on this day for price to go up to this MWOG, this is where you start dialing in your entries. What do I have in here to provide context for why price is going to move higher? Right? Mitigation. All right, this high, this low, break a structure, mitigation, boom, mitigate the low. You with me? This is where you're looking for your buys. Not here, not here, here. Is that helpful? That makes sense? Honestly, if you can start deploying that, to your trading and start getting patient and waiting for price to get down to 25% of your projected range, you're going to find that your delivery with price is a lot cleaner in terms of when it does deliver. And if you're wrong and you're offside, it's very easy to go, okay, well, I'm offside. Right? If it goes through your low, and your low is your low where you're anticipating price to pivot and it doesn't pivot, well, you're offside, aren't you? Right? Move to the sidelines, wait for price to set up a new opportunity. Okay? However, if price gets back down into the 25% and you're on the right side of the move, trust me, your move is going to be juicy. It will be clean. Right? Because essentially what is happening is your price is coming back down, offset accumulating before moving higher again. Right? Versus what the majority of retail do, and I don't mean retail condescendingly because technically I'm retail, but they'll, you're trying to pile in longs here. You're looking for this. You're going, well, look at this little fuvagoo. Boom, baby, let's go. Oh, what about this, what about this balanced price range? Boom, let's take this high. Yeah, absolutely, sure, it could do that. Right? But you're lowering your probabilities for a successful outcome. Right? This becomes lower probability. Right? And if you're not in down here and you missed your entry, or you're not in here, which is your lowest opportunity for your low risk buy, right? Mitigation. Order block, propulsion block, dip back into propulsion block. If you're missing all of this and you're up here and you were sat through here, you just missed the trade. Soak it up. Own it. You weren't good enough. Boo-boo. Right? Wait for another opportunity to present itself. Right? Let price come to you. Let price come to you. Don't force your will on the marketplace, because you will lose more times than not. Oy, oy, oy. Anyway, so little session for you guys this morning. Just a little tete-a-tete with you. So we've still got that gap. So I'm not interested in ETH with RTH gaps, right? So this low down at 496 is still open, right? This is the same RTH, which ES is now currently below. Okay, so this is this RTH from this day. So if we go back to ETH, obviously we're now below that gap. We go to NQ. NQ is still above this high. So I'm still I'm looking for price to come drive out this RTH gap during RTH, if that makes sense. So my ideal scenario will be that we are still above this RTH going into the open, and that we can drive out this RTH at the open is what I want. Come take out these lows, 480 and 440, ultimately getting back down into this Wix CE, which is 53. That's actually a bit higher, probably, yeah, 53. So one opportunity at the moment would be trading anti to my overall daily bias, which would be my MIT 62 model, which gets you inside of here to come work up towards this SIBI, or wait for this SIBI to trade it short. If it goes through the SIBI, the last port of call is the RB on the 15-minute. So essentially what we are trading in yeah, I don't know. Oh yeah, I shared the wrong thing. Sorry, one sec. There you go. So what we're trading inside of is, for me, is a classic sell day. Okay, so there's ways to do that. London dealing ranges, blah, yada, yada, yada. Yada, yada, yada. So what price will often do if it's accumulating, right, which is what we're doing, we're accumulating, and we don't have any high impact news events, right? So Wednesday, tomorrow we've got CPI, but it's GDP, so it's not really anything too strenuous to worry about. Thursday we've got unemployment claims, and Friday we've got a fairly big day. So what usually happens if you got back-ended news is price and consolidation. We can just go back and forth on this MWOG. So this MWOG here is our current weekly MWOG. So we just bounce back and forth this MWOG going into the back end of this week, which is what I'm anticipating. So I personally want to see us drive out these lows today. Ba-bum, ba-bum, bum, ba-dum, ba-dum. Ba-bum, ba-bum, bum, ba-dum, ba-bum. Yeah, on YouTube, bro. What's up, Franny? Yeah, well, good, bro. Just doing a little session this morning with the guys here on YouTube. So there's your mid six. Whoa. So if you took that entry, make sure you're paying yourself early. You would have taken it just before mid 62 if you took that. It was like a couple of points above mid 62, so be mindful of that. So if you took it, you'd want to be paying yourself here back inside this M1 premium. All right. So as we were talking about, you know, where are you looking to find your entry? Lower quarter projected range. That's where your moves are going to be clean. Okay, so all the way back down into 25% projected range. Boom, clean. All right, it's like a casing point. Okay, so if you literally just took this as a simple scalp trade, at least you're in the right area where you should be looking for them. Yes, sir. Yes, sir. Bum, bum, bum. But yeah, beautiful week, beautiful start to the week last week. Just gonna build on that today. Build into the week. So for anybody who's on YouTube who's not Red Pill, what is it that you are currently struggling with in your trading? Let's see if we can figure it out, help you out a little bit. If anybody wants to ask a question or they've got something which they're struggling with, what is it? Nobody? Everyone's all good? All right. Okay then. Happy days. So go. Such a beautiful trade on gold. Oh yeah. Unbelievable rebound on gold. So you're looking for, if you're in that long, terminus is the lower quarter of the M5 CB. You want to be paying yourself Back inside of a premium. Certainly here, side of mitigation. So technically on a 5, you're going back through the dealing ranges now, right? So this is now fair value on the 5. So back down into discount. Lower 25% of projected range. Pay yourself. Not quite hit mitigation on this low, so it's left this door open. So this would be mitigation on that high at fair value. If you're holding runners to get to this lower quad. Pardon me, sorry. Bum, bum, bum. Anybody in this long, by the way? Spoken about it all morning. Steve's in it, good stuff. Little one and done before the open, happy days. Yeah, good move. Live your life. All the way back down to 70.5, right? One second. Live your life. Is that Irene? Is live your life Irene? I always forget. Sorry, there's too many of you. Oh, Jamal. Sorry. So you're looking for the lower quad here, guys. That's where you want to terminate. I'll put 14. Jamalskis. Why don't you just change your YouTube name to Jamal, bro? Make life a lot easier. So there you go. If you're in on this, 38 up to 80, 40 points. There you go. 40 points pre-open. If you're holding runners now, you're just a pure Brucey bonus. So you're back up inside of a premium when price gets into this RB. So this rejection block at 90. Back into an M5 Prem. Obviously you are the best teacher I know, so I love to ask questions even though I'm RP. How do you stack confidence on your bias after a huge range? How do I stack my bias? Can you be more specific about that, Jamal? I'm not entirely sure what you mean. You say I talk about it often. I don't even know what you're talking about. Do you mean after this on the daily? Is that what you're referring to? If you're in this, that's your terminus. So partial, prem, 1 minute DR, boom. Pay yourself into at this RB on the 1 minute is your next, which is back up 5 minute 38. And then beyond that, you're at the M5 quad low. Yeah, so it's a yeah, okay, I hear what you're saying. So after a huge range day, how do I look for where I'm looking to go short? To your question. Yeah, so like the same process as always, right? In terms of, deploying base rules to your trade, which is you want to be going short inside of a higher time frame premium. Okay, so you want to be measuring what is your new DR, okay, and what is your DR, and you find your X level premium DR, and you consider where you sit on the higher time frame and whether you have support for that trade idea. Okay, and then you're going to go down your time frames. All right, you're going to go down through your dealing ranges to find support at that level as to why price is going to respect there. Okay, so up here you've obviously got the lower quad of this hourly SIBI. Okay, so inside the hourly SIBI quad, if you are, I'm assuming this is what you're looking for in terms of a short yesterday, right? If you're looking to short this, even though we were looking to drive it long because we were inside of a discount, right? So this huge range day, we're now looking to take price back up into premium once price has come back down to an objective on the low, which is daily discount, right? So I think we're kind of going backwards on ourselves here. But if you have a huge range day and you find yourself inside of a discount and you have context for price drive out the high, obviously you're bullish, right? To come drive back up into a premium. But if you're looking to short a premium after the huge range day because you're now looking for continuation, this is where you got to start asking yourself, do we have the higher time frame market structure to support lower time frame bearish order flow? Right, and then you're going to overlay everything else that we talk about in terms of weekly profiles, X, Y, Z, right? So if we're looking at, okay, well, what do we have here to support bearish continuation? Well, fair value on the daily is a high time frame opportunity for institutions to step in for continuation. Okay, we also have the lower quad of the H1 SIBI, which, as we know, is technically an IFED, right? So up on this high is where I'll start going down the dealing ranges, or down the time frames, I should say. And so, do we have context why price is going to respect that? Well, in here, balanced price range, order block, unmitigated range, right? So once you have a PD array in mind that you're looking at and you're stacking it with your X levels, you're then going to sort of tie it in with a schematic. All right, so if you were short on this day and you had noted that you had a huge range day in a buy day profile with no pullback whatsoever, you had weak lows on the low, right? 1150 macro, right? So if you go to this point in time, that's where you're going to start deploying your base rule principles to come trade back out those weak lows. So then you go back through your dealing ranges 1, 5, 15. This comes back into a 15-minute premium in here, right? Okay, where does that sit on the higher time frame? Hourly, right? Low hanging final objective for that day. Okay, so where's 50% of the daily range? There's 50% daily range, right? That's your final terminus point. Okay, once price hits 50% after a London close reversal, which is what this is, what do? Nothing. So it's a case of, combining everything. It's okay, so what is my long-term weekly expansion? What am I looking for in my weekly candle? What is the current weekly profile that I'm in, and what higher time frame market structure do I have in place that I can get in alignment with lower time frame order flow to support that higher time frame price action? Okay, lower quad, M5 order block, unmitigated range, fair value daily. Inside of a schematic, London close reversal. What's a London close reversal? TP, 50% of the daily range, right? So it's a combination of everything, Jamal. Like, the stuff we talk about all the time. It's the same stuff, right? You just got to be patient and wait for it to get there, because obviously the range is, for price to get all the way back up into a premium on the hourly. This is a big old range, right? The key is obviously not to try and start piling in shorts here when you haven't got, anything to key an entry off. So a higher time frame point of interest base rule inside of a premium is step 1 of base rules. If you don't have that, you have no trade. Yeah? And if price goes through your level, you move to the sideline. Right? You wait for price to set up a new opportunity. Right? Or if you don't have confidence in this level, but you're umming and ahhing, do I take this trade, and price ultimately does this? Well, now you're going to look for, okay, so it did respect here. What is price action done to support bearish continuation? Well, you can see it's quite clearly supporting this as a bearish continuation, right? Which is mechanical TS model. Okay, so you missed this high, analyze, reset up, mechanical TS model. Get involved with it, right? On the lower time frame, right? Just because you missed this exact very high on this specific day doesn't necessarily mean you can't trade this high. Make sense? Let's have a look. There is really nothing above that, Jamal, that you'd want. This has the potential for a 15 to 1, but there's no 1 minute SIBI. And then above that, you've got this SIBI, which hasn't got into the lower quad. So I'd be more likely looking to target that M5 SIBI, which would be all the way back up inside of a premium on the daily. So yeah, back up in towards that volume balance on the daily inside of a premium. So this M5 SIBI, which is currently left open, is where if I was looking, if price started piling through that, there's nothing in here other than that to stop this. All right, this high time frame order block, this unmitigated range really is it. There's nothing else in here to support price. Like for bearish, there's nothing, right? It's just liquidity here, right? This is a RB, but there's no model there. And then you obviously have this weak low on this high, which didn't go into that SIBI low. So yeah, back up into a premium inside that volume imbalance. But at that point, you'd be considering a break of structure on that hourly, right? Now, the only thing but don't forget, you got to time it with a schematic. You got to time it with a macro. Just because it is a higher time frame point of interest, that isn't enough. Like that isn't enough, right? Oh, just because it's the lower quad, I'm going to trade that short. Like we have to be clear about that. It's not enough on its own. You know, just because we have this lower quad here is not enough to trade it. Okay, so whenever I talk about, you know, where I'm looking to take a trade, it's in alignment with context, schematics, time, market structure at the time, and what has price delivered up until that point. Okay, that's what makes it high probability. The high probability is not in that lower quad. The high probability is everything that leads up to price reaching that lower quad. So yes, I can have a target in mind, right? I can be saying I'm looking for bearish continuation on a fill of this quad on the H1 SIBI, because that would be an IFED anticipating bearish continuation for a potential Tuesday low, right? At high time frame fair value, allowing institutions to step into the market. Okay, cool. As a general daily plan for what you're anticipating for that day to do, right? Okay. But without the context to support your trade short on this day, there is no trade. So for example, if price had done this on this day, let's say we had this and we had this, and we were coming up to that lower quad, absolutely no fucking chance I would short that lower quad. No chance. That is like your textbook buy-day profile. No way. Not a hope in hell. All right? But the delivery of price up to that lower quad set you up for the short. A London close reversal, weak lows, engineered. No pullback since the mid-morning macro. None. London close reversal, sweep out those who are trading their stock. That is your schematic. Fair value becomes your dull on the daily DR. Yeah? So that combined with that sets up that. So it's, you know, it's a big mental shift. Right? Being able to read candles and what candles are doing. It's a big mental shift. All right, so if you're still holding runners, you're looking for the lower quad of this M5 SIBI, you should have the majority of your positions off. We're ultimately looking for price to run the lows today, but we're trading a short-term pop leading into the open. Guys, if you'll find value on this stream this morning, consider smashing the like. 3 of you have done it. Oh, geez, Louise, what's wrong with you all? You dark souls. If you wouldn't mind smashing the like, it means a lot. Would be appreciated. If you learned something this morning. Fourth. Cheers, bro. Okay, so when you're reading this PA, you're going, okay, so what has taken place? I'm still looking for this lower quad, this M5 SIBI, which is left open, to get back priced into this mitigation block on that hourly. After price getting down to our NVOG, what has price done in here, and what do I have to support price? Those are your questions. And where is my projected range? And where is 25%? That's all you're asking yourself. And you're going, can I find an entry in 25%? If not, can I get a pullback into at least below 50% of projected range? And then inside of here is where you're anticipating price to pull back into, and you're going to find your PDRAs in here in alignment with goddamn X levels. It is that easy. X levels. Boom. That's where you are hunting, ladies and gents, for your PDRA. So one of my models, MIT62, Bosch. Go up your higher time frame, start trying to build context as to why price is going to support that low. This low inside this wick mean threshold. Price should not go through that low. Order block. What makes a high probability fair value gap, folks? What makes a high probability fair value gap? Anybody? Yes, sir. 3 OBs. Fair value gap. Boom. What is this? This is an order block. And price has mitigated this low. There's our buck stop. Order block. What are these? Propulsion block. Amen. Okay, so price has come back to a propulsion block, filled the fair value gap inside this order block, high probability fair value gap, right? Okay. So if you can then layer on top of that a model, would that not make sense? If you can layer a model on top of that, would that not make sense? And you're about to bag almost a 100-point trade with me this morning. Right? If you can layer a model on top of what this market structure, right? This is where you take your trading to the next level. So this is a MIP 62, back into a discount, higher time for a discount, below 50% of projected range for our objective. Anyone still holding runners? Are we going to be one and done again before the open? Didn't want a fake pullback, lol. Ninja already closed again. Boom, one and done. Thank you, X. You're welcome, mate. So it's now up at 25% of projected range, right? So as we were talking about, this is where you're just holding your runner to terminus. Okay, it should go and fulfill its objective versus coming back down to sell side, right? So as soon as you're above that 25%, price will go and deliver, right? If it's going to go and deliver to that target, right? So if we go back to this, what we're talking about this morning, the whole topic of conversation today, it shouldn't come all the way back down here. So if you were trading a stop would now go below this low. It's got no reason to come back down below this low. It should just go and fulfill its objective, right? If you're just holding a runner to terminus. It should. All right, once we're back above 25%, sorry, 75%, it should just go and stab up to that objective. There you go. Terminus. Wham, bam, thank you, ma'am. There you go. Almost 100 points before the open. TP hit 80 points. Good stuff, Steve. Well done, mate. Beautiful stuff. That's what we do. Bilbo bags. So for me, it's got to hold on to this high. Oh, is it Murovski's? The high at 43, the RB. Anybody not inside Red Pill catching this morning? Beastie trade. And if you took it, absolutely no drawdown whatsoever. So the only thing I have an interest at the moment is flipping short at this rejection block at 43. Stop above the highs. Can drive out these lows. That is it. Can fill this RTH gap. I'll be keeping an eye on ES. If ES drives out those relative equal highs, I'll be careful. So ES drives out 920. What I don't like about shorts at that high is the void at 26 on ES. And the void on NQ at 74. 74. Potential M5 continuation variation here. This would be incredibly aggressive. We'll go for a fill on this Sibi. What does that give you? 5 to 1R. It would be hella aggressive. You'd only take this if you've got profits from that trade before. If you don't have profits, don't trade it. What's that low? Yeah. That's some ugly PA up here on the high. Still not high enough for me for a short. It's got to get into that 15-minute RB for me. Two secs, guys. Got 15-second 3 drives here. Mindful of it. I just feel like we're going to mess around to the open. London trade's done. So if you traded it short this morning, mechanical TS model, beautiful. If you traded a bounce, beautiful. It's more likely to go into some form of consolidation here. We're back at 50% of the daily range. Just hopping around 50% of the daily range. Just leading into the open. So this is when you got to know when to trade and when not to trade, right? So when price fulfills an objective, that's when you sit still, right? Like you wallow in your glory, right? You wallow in the glory of your win, right? You don't immediately start hopping back into trades. Started reading a new book yesterday. Awesome book, by the way. There's an amazing quote in it from Roosevelt's speech, Citizenship in the Republic. I don't know if anyone has ever read that speech, but it is a phenomenal speech. I imagine the American people will know that. Is that taught at school? Is that taught in school? Citizenship in a Republic? Theodore Roosevelt's speech. Who would like me to read them a story? Anyone want me to read them the quote? So good. Part of it, a segment from it. It's really, really important. It is not the critic who counts, not the man who points out how the strong man stumbles, or where the door of deeds could have done them better. The credit belongs to the man who is actually in the arena, whose face is marred by dust and sweat and blood, who strives valiantly, who errs, who comes short again and again. Because there is no effort without error and shortcoming. But who does actually strive to do the deeds? Who knows great enthusiasms, the great devotions? Who spends himself in a worthy cause? I love that. I think it's amazing. Which basically sums up social media, isn't it? It's not the person who critics that counts. It's the person who is in the trenches doing the work in the arena. Bum, 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 bum. Got 3 drives on the 15 seconds. Eesh. Is it going to hold though? Tis the question. I wanted slightly higher on the short. I wanted inside the RB. I guess I could have parlayed in using the M5 continuation model, but I didn't. Too wide a stop for more. So let's back down into an M5 Prem. I do not like that void on the 15 second at 606. Fuck no. Hell no. Hell no, bro. I'm not shorting that. Just gonna sit patient, wait for price to set up in the opportunity. I don't trust this 3 drives. Even though I can go off this 3 drives, for me I want higher. It's gonna stick to my principles. Yes, we're inside the H1 mitigation block, but we're not really at anywhere where you'd anticipate it to move, right? In fact, 7:30 is usually market protraction. So it's too early. Morning, Debbie. Let's do a... Let's find out. Let's do a quick poll. Always like to know who's in. Well, who took the long? Beautiful, nice little trade long this morning. Just sat still, waiting for the open now. For me personally, to trade short is going to take out the RTH gap from yesterday. That's my goal for today. So my preference would be for us to for them to just hover us and just accumulate around 50% of the daily range, which is where we currently sit, right? 50% of the daily range, this high, this low, 50% daily range, just bouncing in around here, right? After big range overnight and into London, and then a nice bounce during London, which we've traded, and now just consolidating ahead of the open. So for me personally, yes, we're inside this mid block. Yes, I want to see continuation to drive out this low. But just going to sit patient and wait for the open. So for me, I'm looking for the RB up on the high. That's currently where my point of interest is. So we'll just have to see where we are leading into the open. You know, that high could change. Like I might have a different perspective if we get close to the open, but right now. I cannot believe that they'll leave that high there up at 605. No chance. So if you did take that short, if you flip the short from the terminus on the high, make sure you're paying yourself here. So essentially we're back down inside 5-minute Premex level here. So make sure you pay yourself. For me, it's just a lot more likely to consolidate leading into the open. Just be very bitty around 50% of this daily range, right? So if you took this trade this morning or you took the mechanical TS short, beautiful. Sit still. Yes, sir. All right, what time is it now? It's 8:40. So I'm gonna keep this. I'm gonna keep this London stream short. So basically, if you've been with me since London, we've traded all of this, broken down the price action, explained the mechanical TS model. I'm gonna take a little break. I'm gonna be back closer to the open. I'm not trading now until at least 8:30. So I'll be back at 8:30 to trade the open today with you guys. So what time is news? So we got building permits at 8:30. Nothing crazy, nothing to write home about. And then it's the second day of G20 meetings, so just got to be mindful that they can chuck stuff out at any point in the day. So no. That's worth being mindful of it. So yeah, that's going to wrap up my little morning stream. I'd highly suggest you go back and watch this one. I've broken down a model called the mechanical TS model. It's my new model. It's one of them which you guys can have entirely free. And also broke down today's price action and the importance of using lower quad of projected ranges. So I highly suggest you go through it today. But yeah, I will catch you closer to the open. All right, guys, take it easy. Bosh.